everyone, John Henry here, slingshotfutures.com, and welcome to the Market Mindset, where we take a look at the psychology behind the moves today so we can better understand tomorrow. And today on the docket we have gold. Now the gold futures, a little bit of an interesting scenario here, and just a phenomenal day, especially in the room. We called a bunch of different psychological aspects that were going on that led to a very interesting morning session. Now if we look back on Friday, we always want to know, what happened on Friday? Are we going to continue that movement? Are we seeing failure of that movement? What's going on? So on Friday, we had a nice move up, but it started making lackluster highs. Notice how if you draw across the highs, it failed to even reach that top of the channel, showing that this may have just been a wedge, something like this. Now, if that is the case, there's a good chance that we may find some bearishness, but it all depends on how we open up on Monday, right? And then fast forward to today, we open up with a gap higher. Wait a minute, right? I thought we were looking for possible bearishness. Well, it didn't happen, right? So whenever you run into a situation where you expect one thing and it doesn't happen, it's considered a surprise event. And whenever there's a surprise event to any degree, you usually expect a little bit of continuation. So we wait off the morning, right? We are sitting right on top of a possible wedge top. We want to see what happens here. Now, buyers did have an option to try to buy in here. We started off the morning doji into bear, into bull, into bear, really back and forth. So buying above this, that's why I don't have it marked. It's not that great. It did end up working, but it would be what I considered a low probability situation looking for an upward movement. Now, we did get that upward movement, and they did run into that prior resistance from Friday. And we ran into it, and we just completely stopped in our tracks. Now, at that point in time, we're starting to see this as a very tight bullish channel. Arguably a micro channel working its way higher, very small movements up and down. And it's very difficult in those types of situations for traders to make money on either side, really. I mean, buying above a candle's high doesn't leave a whole lot of room at the top, but buying a bear candle, you're taking the risk of having to use a larger stop. So it's a really difficult environment to trade. So what are we looking for? Well, if we know that we're expecting a pullback, buyers don't want to buy up here, but sellers don't want to sell either because there's a good chance of bad follow through, we want to wait for a reason to find that pullback. We finally start breaking out of that rising support of the channel, and a beautifully bearish candle allows the sellers to come in and try to push the market down. Now, you're not expecting a full reversal off of this. You're not expecting a massive drive to the lows or anything like that, but we know that we're expecting a pullback. The buyers don't want to buy up here, so they're going to have to push lower to find more buyers, and that's what they had to do. So it's a nice short-term opportunity to sell to drive the market back to the moving average, and once we hit that moving average, then you start looking for what did they do? They weren't able to break the lows, which is a big clue. We also trapped in a lot of sellers at the bottom with failures, and you can see all of those wicks at the bottom show buyers were accumulating. Probably a couple sell stops down there as well. But overall, the buyers are obviously interested down here. And the fact that they cannot break the lows is a very big clue. So when we get a strong turn higher, it's all systems go, green flag. Now we start looking for the buy side. We've got the pullback. Now we can run towards the upside. So looking for a buying opportunity here, and it pushes back through the highs. And this is where it gets a little bit kind of tricky, right? It's very easy to get messed up in this type of situation, so you need to play it really closely and figure out what's happening here. We know that buyers are in, right? They bought right above there. I was one of them. We're buying above this move, and we're looking for that continuation to the upside. We get good follow through, nice bull candle, but that candle was all wick on the highs, and it failed to even close above the major swing high from earlier. So it's a little bit of a concern. We start getting a big bear turn down. Now it's not looking so great, right? Do I really want to be in this buy? Maybe, maybe not. We know that there are going to be a lot of buyers with stops underneath here or underneath the low of day. And as long as that doesn't break, we've got a pretty good shot at the upside. We start getting a small little bull turnaround, and what do? They come right back to that point of entry and stop dead in its tracks, right? So that's showing you that the buyers may be trying to get out early at break even. They don't want to sit in the trade any longer. Now, the stop down here still hasn't been broken. We still haven't broken a new low. So the context here is that we're likely going to get a trap, and then the buyers push to finish off the move. There's not enough buyers in the move yet to get that breakout to the upside, and the only way to get those buyers in are going to be to trap out the sellers, hit a bunch of sell stops, liquidate into a huge amount of buy orders, and shove the market up. And that's exactly what we have. We had a big tap down. They slapped the low, quick little trap on the bottom, never turned back down or continued, which is a big clue. They trapped the low of it, and buyers are going to be buying the close of it. They're going to be buying above it. They're going to be buying for pretty much any reason now. As long as it doesn't break this low, you're good to go to the upside. And when they finally broke out to the upside, that was a big old run, finally moving higher, and that was the breakout move that we were looking for pretty much all morning. So just a great move in terms of not only the technical side of things, but also the psychological side of things. Psychology is what keeps you into these kinds of trades and gets you out of some of the bad ones. So really great overall movement today, and you can't really ask for a much better day on the gold future. So that's going to do it for this one. Hopefully you found it useful, hopefully you found it interesting, and maybe a little bit entertaining, and we'll see you next time.